Back to one of our top stories now. It's all about the RBA today when it comes to the economy and how much of a rate rise it will do. Joining us live, Chief Investment Officer at the Motley, Scott Phillips. Scott, good morning to you. So feel like a broken record. We, for 8-9 months in a row, we've been talking about this. So what do you think the RBA does today?
Good morning. Definitely a broken record. This will be, if they do move, the 9th move in a row. We can't say 9th month in a row, of course, because as you said earlier, they had January off. But very, very likely they increase rates today. There's always the question of what will they do and what should they do. They're two different questions, and we never know the mind of the RBA specifically. There are a few people saying, you know what, let's have another pause. Let's just wait and see. There's some sign that maybe, just maybe, we're tipping over the edge. The problem, of course, is that 7.8% inflation, even tipping over the edge, is a long, long, long way back down. Going to take quite a while. I don't think there's enough justification for the RBA to do nothing. In fact, some are saying they should go 0.5% this month, or a 0.4, take it up to an even 3.5%. We like our even numbers. So those are the potential range of outcomes, made a very, very wide range, as well as the rest of the year. Some people saying no rate rises, some saying 4 or even 6 this year. So the real question, the real thing is, nobody knows exactly how this recovers. We know it's a global problem. We know each central bank has got to do what it needs to do to make sure there is a local as well as global solution. Personal anecdote, mate. Someone tried to charge me $140 for a hand car wash yesterday. You'll be happy to know I said no, thank you, and bought some stuff from Super Cheap. What I'm going to do it myself.
I saw you do that, Scott. Yeah, I paid $110, $120 a month ago for a car wash, and I thought I won't be doing that again.
That's the thing, mate.
Yeah. Anyway, you want to be careful. I mean, the RBA, I'm sure, is aware of this. That they don't go too hard and break the economy here, don't they? I mean, and I mean, you did mention the global factor too, and that's a really good point because Warren Hogan makes this point too, that the US is way higher than us. I know it's a bigger economy, but does that put things into perspective?
It does, mate. Interestingly enough, too, the Australian dollar's fallen from over 71 cents only a couple of days ago, now under 69 cents, 68.8 this morning. So there is that sense of the differential interest rates, what that's doing for foreign exchange, but also for the general economy. The real challenge for Australia is, what do we want to have happen, and what can we afford to have happen or not happen? Yeah. We know there is a real issue around inflation. We don't want to, as you say, wreck the economy trying to get inflation under control. The flip side is, if they don't do enough, we could have 3.5% interest rates and then still have high inflation, which would be the worst of both worlds. So the risks are elevating on both sides at the same time, as they almost must, because this process is going to happen. And it's always the case. It's axiomatic. We haven't had it for quite a while. Rates haven't gone up for a while. The last rate rise is always one too many. Almost by definition, we know that. But they're going to have to do more, in my view, because they're just not going to have inflation come down far enough or fast enough to do nothing. On the flip side, we know the mortgage cliff is coming. We'll talk about that this year a lot. Yeah. As that continues to loom, that is a big risk, not only for those householders who have to pay more, but the money it sucks out of the economy, not exactly all at once, but in very large dollops, as those rates go from 1.89
when does that start?
1.99.
Sorry, Scott. When does that start, the mortgage clip?
Yeah, May is the beginning of it. Now, it runs for about 18 months because people fixed at different times in the last 2 or 3 years for 2, 3, and 4 years. So kind of May this year right through to probably November next year. That's about the time frame, about that 18-month period. So it's not going to happen in big single hits. But think about it. We just heard earlier in your story, extra $100 a month if the RBA goes up by 0.25% for the average mortgage. But when those rates reset, extra $1,800 all of a sudden in 1 month for those people. Where's that money come from? Maybe it's savings. Maybe they're already ahead on their mortgage. Maybe it comes out of the physical economy. So the RBA is looking down the pike and saying, these are really big risks. As and when that happens, we don't want to be in a position where we've gone too far already and have to try and run triage, really kind of, make sure we fix the damage, but they can't afford to assume it's going to be okay. If it's not, we're in real trouble.
No, true. And another day where the governor gets reminded of that 0.1% that states that the rates would remain low until 2024. So again, broken record. Scott, thank you. Talk to you soon.